Welcome, everyone, to the first test recording episode.
of the We Hate Money podcast with Arnie and Wiz.
Yeah. Uh, so, I'm not too sure if you've been seeing that. Let's start off with the obvious stuff, right? So, Apple earnings came out,
Mm.
and they weren't great, but they weren't horrible. Um, so it finally finally gave up the ghost that
What
it was
remind me what
riding.
was it was year over year drop on revenue, wasn't it? Is that what it was?
I think it was actually up year on year revenue. It was something else that was the linchpin. Hold on. I, I I've got it somewhere here from. It's got to search what I post and I'll find it pretty quick.
Yeah, I remember reading because I'm not invested in Apple or anything like that, so I wasn't I don't I don't pay too much attention to it apart from people telling you and I about what's going on with it.
Okay. Oh well, so okay, here it is. So revenue growth was down year over year, 1.4%. Profit growth though was up year over year, 2.25%. So that's what I was thinking. And their iPhone sales year over year is down 2.45%. So, it pulled back.
Mm. And I think
Um,
I recall someone saying to me that they were guiding for like lower Mac, lower tablet sales as well, weren't they?
yeah, it seems like tablet sales are souring. So, but I don't think tablet sales have ever really been the big juicer for Apple. So,
That's true.
I
That's
think it's
true.
been phones. It's just, I think it adds to the sentiment that maybe Apple's kind of ridden a little too high for too long. So, but it cracked below that support line it was continuously rallying off of for the past 6 to 7 months.
Mm.
So, from a technical standpoint, um, if you asked me to look into my wizard ball, I would I would say it's going to want to go back up to test that support line again and make make a determination from there. Uh,
Yeah, I don't know. I sort of feel like I've been sort of waiting for this other shoe to drop for a little while. You know, I feel like Apple and a few other big names. Well, I think you and I have a consensus view that Apple and a few other big names have sort of carried the market through this weird fragmentation in markets where a lot of companies in the S&P 500 not doing very well, but the top 10 or so are doing very well and carrying the indices with it.
yeah, I think what was the performance year to date? It's like 40-50% for Apple. I mean,
Apple year to date, even after the drop, is 43% year to date.
yeah, it's been doing pretty. I think that is a bit too much exuberance, even for the top weighted stock. And
Well,
there's, reasons for that, but
it's come
I think
off
it's
14% though. Like at its high, it was 57% year to date.
yeah, I mean, it's been a good pullback, which is why I think it's kind of probably getting overdone now. Which is why I think there's more likely to be a test of that trend line rather than a continuation downward.
Yeah, I
Um,
agree. S&P 500, 18.16% year to date.
it's doing pretty well.
Yeah. So I don't know. The ones that are on my radar at the moment are obviously Tesla is always on my radar. And there's big news out of there that Zachary Kirkhorn, the CFO, has, well, some people are saying stepped down, some people are saying fired, but he's not fired because he's staying until the end of the year to like help with the transition. But the timing of it is weird and suspect because he's been there for 13 years, and normally these sorts of things are announced on a call, not just out of the blue.
Yeah, it could have been a management decision not to put it on the call. If especially if he's just like quitting um, over a long period of time. Usually, if it's a bit more of truncation, I'd expect it, but he could have just made the choice. Just came out and finally said I'm out. But
Yeah, I don't know. I mean,
it's hard to know. We'll find out after he's gone, and people will talk then.
I'm sure. I'm sure it's like breaking news. We'll get a bit more of it. Speaking of year to date, Tesla's up 132.61% year to date. And that's from a low of 108. Sorry, like Tuesday, 3rd of Jan, it started at 108.10 cents.
Yeah,
So that's a
it's
wild time. But
abs yeah, its absolute low was just above 102. I
okay,
mean, I was like, woof, that was a steep drop, but um, it's doing it. It's recovered well. It it faced its previous, supports and resistance. Now it's sort of in a downward consolidation. So nothing to get excited about.
no,
Um,
no,
yeah,
nothing
just
to
see
get
where it
excited about.
goes.
Well, and then the other one of my biggest conviction plays, which I have taken an absolute beating on, is Playboy. So that one, I think the earnings for that are like in like a day or so. Actually, I got to have a look, but that is currently sitting at a measly $1.79. So yeah, haven't done very well on that one.
Yeah, well, some of these take a long time to pan out. But I think there's still potential for Playboy. They just have to get their act together,
Hmm.
and it'll pop. It seems like they've been doing that though, which is weird.
Yeah, well, there's actually this excellent research report put out by these fellows called Wook Capital. And are you familiar with
Mhm.
Wook Capital?
Yes.
Yeah, and like so, I didn't know about these dudes until recently, but they apparently made a lot of money off GME when that whole saga occurred, and they like in conjunction, I want to say, with that Roaring Kitty fellow, they were sort of like the pioneers in some of the retail space of like getting people on board, and they actually put together this website called GME like GME due diligence, where it
Hmm.
was meant to be like crowdsourced due diligence on the stock, and that was sort of the idea behind it. And just recently, they've launched something similar on the same website, GMEDD, but they're doing PLBYDD, and they were discussing, their sort of bear case, neutral case, and bull case for the stock. And I've been listening to the last, I don't know, years or so worth of calls of Playboy, and their thoughts sort of mirror. Like they definitely have some stuff which I didn't think of, but their thoughts sort of mirror my own in the sense that they are sort of talking about how if Playboy can sell off all of their assets, including Honey Birdette, which was acquired, during the pandemic for a lot of money, but most of it was paid in stock when the Playboy stock price was higher. If they can
Yeah.
if they can sell that now and clear their debt, they've just renegotiated their licensing agreement to be 15% of gross revenues. And then that's all the business will be. Like they've literally, if they sell off Honey Birdette and I think they've got another brand called Lovers. If they sell those two last remaining pieces of the business off and any artwork they've got, they'll have nothing else except the licensing business and their digital creator platform, which is a rival to OnlyFans. So, but that's a bit of a moonshot. So I'm sort of like just if you take that as a bit of an option and pretend, well, not pretend, but assume that it won't play out. Yeah, the licensing business alone, I think personally, and this is general in nature, not advice, but I think it's undervalued at $1.79, and I have been buying it.
I've been waiting to pull the trigger, and I may not wait much more.
Yeah,
Yeah, it's not so much price. I'm just trying to see when um, it's going to break out of this consolidation and light drawdowns. So
I'll be interested. I'll be very interested to see and listen on the call how their I forget the metric they use, but the gross merchandising value that's being pushed through the platform. Like if they can keep growing that and then keep growing the users and keep growing the content creators, that'll be interesting because that's always sort of been An interesting lever they can pull is how they leverage the brand through that
Yeah.
platform. Yeah. So that's an interesting one. And another one that's on my radar, Wiz, which you probably know a lot more about than me, I think. Correct me if I'm wrong, but I've been recently doing a little bit of reading on SoFi. Are you familiar with this one?
I'm familiar with SoFi, but I am not intimately so. I would think that a couple other folks we talked to, um, more so than me, but I aren't they waiting for the student loan payments to kick back in? Isn't that part
Well,
of
this
the
is
bullish thesis for it?
well, this is what got me sort of researching it because I wasn't. I mean, I'm obviously Australian. You are obviously American, so you closer to the student loan news than I am. But I didn't really understand what was going on with the student loan news, and I was chatting with some of our friends recently, and they were telling me about I don't know the general nature of how the student loan system is set up in America and how SoFi has added a lot to their loan book in this space, and that there's also the potential for the Biden administration to pass a bill which will allow anyone who makes a minimum repayment or more on their student loan to have the interest paid by the government. So this will essentially that, and the beneficiaries will be the lenders. So I mean, the beneficiaries will be the lenders and the people with the loans because they're going to have their the loan burden decrease, and SoFi will have the interest parts paid by the government. So yeah, that's sort of what kicked me off into reading about them. And I was sort of, I think it's either late this quarter in quarter three, or maybe at the start of quarter four. There's going to
Hmm.
be news on whether or not this bill is passed. Is that your understanding?
I'm not too familiar with the bill, but I would think that's when you're going to see. I think that's before the legislative period ends. So they'll be back in uh, they'll be back sitting in Washington making that choice. I personally am not sure that's gonna make it though. Um,
Even if that doesn't make it, I think there's also the other catalyst, which is that the student loans have been in some sort of more. Is it called a moratorium? Where like they haven't had to be paid back.
yeah, they haven't. You haven't had to make any payments, and that's coming back soon. I think that's coming back next month.
Yeah, so it is a
So
moratorium. There's been a moratorium. That's right, and I think it's maybe I'm getting confused with the news. Perhaps it's at the end of this third quarter that will lift, and people who have their student loans with SoFi will have to begin to make the repayments again. So either way, there's
yeah,
a few big positive catalysts coming for SoFi.
absolutely. And well, to me, there's a lot of people who haven't been making those payments, and I think it's probably the greatest missed opportunity to pay down those debts. Uh, so instead of funneling more money into paying those off, I'm concerned that a lot of people have just decided not to pay and use that money elsewhere. And that to me is just a recipe um, for disaster for those people.
Yeah, I guess
Because
that also. Sorry,
you
go
got to
on.
pay, yeah, you got to pay down principal, and with student loan debts, you have to pay the interest off each month. So that's a over 36 payments. That's a considerable amount of principal you would have paid down. So SoFi should be making some good money when those turn back on.
I guess it's you sort of made the old grey matter tick over a bit there, and I was just sort of thinking, with the added cost of living pressure that we're seeing, how are the consumers going to be able to absorb this extra pressure from these loan repayments coming back on? So I wonder if we'll see a lot of bad debt and default in that student loan space, which potentially could be a negative for SoFi. So
Well,
interesting.
not student loan debts you can't file bankruptcy on.
So what does the average American consumer do if they can't pay back their student loan debt? Like what happens?
Well, if you can't pay back your debt, I've never been in that position, So, but you have to, well, so you'll, let me look that up for you.
Yeah, well, I'm just
Yeah, because
while you look
yeah.
it up, I'll have a bit of a hypothesis here, or maybe we don't even have to fact check
Well,
ourselves,
I mean,
Wiz.
I don't think you want to. I don't think you want that to go into default.
No, you wouldn't want
Um,
to, but I'm wondering if you can't declare
yeah.
bankruptcy to get out of it, there must be some kind of mechanism to perhaps capitalize the interest that you owe and you'll have to pay back at a later date, perhaps. Maybe you get penalized. Maybe it's at a higher interest rate. There must be some kind of mechanism because there would definitely be instances where people are missing a payment.
Well, there's
Uh,
different types of student loans too. So I mean, it it's gonna kind of depend on that. But let me see here. They'll damage your credit score. You lose access to federal protections like deferment and forbearance. They'll do wage garnishment, tax refund offset, or Social Security check reduction. You can be sued by your loan servicer as well. Um, and let's see, and you can lose your eligibility for further student aid.
So it sounds like
And that
pretty heavy
and that's
penalties.
just yeah, and just that's just unpaid for several months. So that's not even like a um, that's kind of you can miss it for 2 or 3 months maybe, and then all of a sudden get hit. I would imagine that if you talk to them and explain your situation, there's more leniency in getting back up with those payments. But if you don't talk to them, then they'll bring the hammer down on you.
Interesting. Well, yeah, so it's something where I've got to do a little bit more reading into the space. You know, a friend of ours, Ryan, was having a chat about this a while ago, and I remember he was mentioning the credit card side of SoFi and how they lend to people who run the whole gamut of credit score. Because in the 10K, they actually break out how much of the credit card balances they have listed against each credit score category or ranking, whatever you want to call it, bracket. But then, like having a bit of a further look at this, I think it's a bit of a non-event because it's a very small part of their business. It's like they've got a small part of their business in credit cards. They got a small part of their business in home loans now, but the major part is these student loans. Um, and
Absolutely.
I think their total loan book as of the 10K, and I haven't looked at I should look at the last quarter. I think it's around 7.5 billion, and that's up like 6 times from last year. So it's definitely growing at a significant rate. And I should mention as well, again, general in nature. Wiz and I don't recommend you invest in this. Do your own due diligence. It's just something that is interesting to me, and I might invest in it. I'm not yet invested in it.
Yeah, I would say it's interesting to see where it goes. It is politically sensitive, but I don't see a downside um, for institutions that own those loans. Um, it's definitely not good for loan holders that are not paying attention to when those payments get turned on, though, because they can be significant in terms of the principal and interest you pay on them.
What about you, mate?
Because
Anything that you're looking at the moment or dabbling in?
I'm always looking at Nvidia every day.
Just obsessing over it.
I just like to, it's curious to me just how it's continued to hold such a high premium.
I think that's
And
confusing to all of us. Like, sorry to cut you off, but like, yeah, like
yeah,
it's gone on an absolute tear. While you chat about it, I'm going to bring up the stock price and just tell you what it is. Hang on.
yeah, go for it. I mean, it was, obviously it had been pulverized like Tesla was back in January, and there's just been this unrelenting um, enthusiasm for it,
Man,
and
I didn't realize how much it was up year to date. Do you know how much it is up year to date
uh,
off the top of your head?
let me see if I can pull up the
Oh,
right number.
I know. I'm asking you to
Oh no,
guess.
No, I think it's up. I want to say it like hit 150 or something, so it's got to be up at least 2 to 300%.
Yeah, man, it's up 217.27% in year to date. So on January 3rd, it was trading at $143.15. Wow, and it's currently 454.16. So wow, I
It's
didn't.
yeah.
I had been reading about it. I knew it was on a tear. You know, the AI revolution. Everyone got really hyped. I don't. I'm bullish on that in general, but I think maybe this particular stock has been overblown. Um, yeah,
It has kind of had a jubilant spree. I, it just I think it's just been you had the AI hype that came in mostly because of Nvidia's numbers in the last earnings were um, exceptionally optimistic for this next quarter. So they have to have a really solid beat based off of where they're priced at now. So I wouldn't say it's a buying opportunity um,
God no, I would not
here.
touch this stock. I wouldn't touch this stock with a 10-foot pole at this price.
Yeah, it is. It's impressive, but I think it looks like it did last in 2021, where it had reached another euphoric high, and there I think that's the danger going into this next earnings. Is it not living up to expectations and um, pulling back hard? So I can see a lot of people being burned trying
Yeah,
to play with fire on that one.
the
But
average the average volume on this is 49 million. At trading at all-time highs, and the next earnings are about 2 weeks away, August the 23rd. So 2 weeks and a couple of days. But I'll be interested to see what happens with that one. So what? So you're looking at this one because you're thinking like, when should I take a short position? Is that what you're thinking?
that's where my the opportunity would be to me, and it it really kind of just depends. You don't want to jump into a short position this high up um, with a lot of capital because the market maker is going to really, unless you're obviously shorting directly, which is can be a lot of capital to do that. But if you do it through options, you have to be very careful about what you're actually buying. Um, and there are safer ways to speculate on that. To me, I wouldn't try to short up here. For the I would wait for the market mechanics to turn against the stock first. So and
Yeah.
that's where you sort of have that winding down of long positions because people are realizing that the AI revolution is flopped for now.
Hmm.
Uh, so
I mean,
that's because I think there's a lot of options activity that has really driven the price to where it is now.
I think you're right, and that will work in reverse as well. So even if it comes off like 20-25%, that might be the time to look at an entry.
Yeah,
Um,
and you just got to be patient with it, and you have to get yourself time because it can take a degree of time these for a company to move, stock to move that high, that fast, and persist as well. There's going to be a lot of unwinding as well. So
hmm. I think
yeah,
yeah,
yeah.
sorry, final thoughts on that. What were you going to say?
Yeah, I think that people have looked at it. I've known a lot of people who've lost a lot of money trying to guess their way for when that does come down. So anyone listening, you know, don't think you're the next big short just because something's at all-time highs with incredible, you know, enthusiasm behind it because it can just consolidate and resolve any conditions you think are happening on a very long time scale. So, um, be very careful.
That is
And
good Good general
Yeah,
advice. I agree.
yeah. So, but another stock I have been stuck in begrudgingly is Bed Bath and Beyond.
Oh, what's happening? What's happening with BBBY?
It's still OTC. Unfortunately, I don't think it's going to come out of there for a long time. No news. Um, I I entered into some long plays on it before it delisted, so I still have them, and I'm just kind of waiting for that to pan out. At 26 cents a share, is it a steal? We'll see.
I don't know. I feel like it's one of those ones which I feel like it's like obviously don't bet the farm, but it might be worth a few small speculative dollars. Um, I don't
I
mind
mean,
it.
it's a quarter. I mean, what more could you ask? Just a couple of bucks, and maybe that turns into a few more. They most likely will get bought out. Um, at the end of the day, uh,
Yeah,
that 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 would be my reasoning to do a long plays. Either they do bankruptcy, consolidate completely, and move on, or they get bought out by somebody else.
another interesting thing that I've been seeing a few people bandying about lately, and it's off the back of like news of super investors or whatever you want to call them taking alternate positions is treasuries. So did you see the news that Bill Ackman and Pershing Square are shorting treasuries? Did you see that news?
I think it's a bold move. I don't think it's an original move, but
It's the oldest trick in the book with value investing is bonds. Yeah.
yeah, I I think it's a good play. I think the market hasn't really priced in uh, yield yields correctly, so shorting treasuries would be a good way to capitalize on that.
It's
Um,
it's interesting, right?
it's
Because it's sort of
well
boiled.
to
Yeah.
just sorry to put a feather in this cap here. It's also a good way to hedge treasury exposure.
Well, that is a
So,
good point. Yeah.
anyways, but yeah, continue.
Well, I think he did say. I think he did say that his particular bet was a hedge. So I think he said that they're shorting the 30-year T. Um, and I'm looking now, but I can't find it exactly. But I think he did say it was to hedge other positions. But
Yeah,
what I was going to say to you was, is I've seen it bandied about in a few different places on the internet now where people are taking opposite sides, and I've seen a few people saying like get long on bonds through something like TLT. Um, so
I well, we look at uh, let me look at TLT real quick here.
well, yeah, I don't know. I was having a look at it too, and I was having a look at some of the leap calls for TLT and how much they were going for, because I was thinking like if you're going to go long, you'd either want to, hold the shares or hold leaps because it's going to be some very significant moves. And I don't necessarily think that the Fed is done hiking. I don't necessarily think that inflation is under control. So, you know, if they do hike, that's going to be sensitive to those long duration bonds, and yeah, that's when someone like Bill Ackman and his hedge is going to pay off and calls will get absolutely crushed. So yeah, I'm not convinced that now is the time, but I've heard it from a few different people saying go that direction.
I would say it's not. I mean, because obviously when these people say it's time to maybe start buying this stuff, they're obviously not saying take your entire capital position and buy TLT. Um, it's good to get some. It's good to get some exposure, So maybe good time to get your toes wet if you've been waiting, because TLT is getting close to its last year lows in November. It did sort of touch the end, sort of like before December lows. Uh, to me, the 30 year is the most exposed to yields, so it's going to have the most dramatic move, which is why shorting the 30 year would make a good play. I feel the way to benefit from yields going up is to get yield exposure from maybe like uh, money market funds, get interest on cash, uh, because you're not buying anything with the fund. You're just putting your dollars into it and yielding the interest off it, right?
Yeah,
So you're not open to the kind of risk you can get buying TLT, or actually going out and buying these bonds as well. And then because obviously none of us are going to be in a large fund where we're going to have 30-year exposure and then do a short on it as well, just to hedge other positions or that position, or to maybe just profit off of it, being stagnant for a long time.
I agree. I
So,
think that's a very fair and balanced and reasonable take, Wiz, and that's what you're known for. I
well, yeah, don't
maybe
get me
just
started.
while we're on this topic, and like I'm sort of thinking we'll do a little bit of wrap up and final thoughts. Where do
Hmm.
you think, like, where do you see inflation going over the next 6 and then 12 months? What do you think is
Well,
going to happen?
5-10 inflation expectations have gone up. So I believe we are going to see a re-inflation, so to speak, and the 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 macroeconomic conditions haven't, really been in favor of deflation. So, we've been having issues with different crops all year and things like that. So um, it's definitely starting to look like we've had a boon in disinflation, and now uh, we may be in for a reinflation. And mostly services are the concern. Services inflation continues to remain very sticky and elevated.
Yeah, I don't know. I don't want to sit on the fence here, but I sort of feel like people are predicting a cut. People are predicting another hike or two. I can see the argument for them just leaving rates where they are elevated and just see how that plays out. But then again, I mean, like you were saying, there are things in the economy, especially the American economy, which are indicating that there is a risk of reinflating. So yeah,
Well, I mean, we we're I mean, we have a high demand for oil right now, and but prices in oil really haven't caught up, and I don't blame them, because you know once bitten, twice shy. Oil longs have to be kind of nervous about jumping back in, um, especially with the SPR continuously being drained. So I think energy inflation is still always a risk, even outside of this inflationary period. It's always there. Um, but it may encourage the Fed to be more hawkish going into later this year if we do see it fully rebound. The thing is that even though the year over year numbers for headline have been very encouraging, um, to me, I think that it's sort of been a false sense of security, um,
mm,
because we still have all this liquidity out there, right? It's still being moved around. It's still getting Nvidia up to $450 a share. Um, so it may not go up to 9% again, Arnie, but it may go up a couple more percentage points, and maybe the Fed won't hike if it pulls back from there, and may consider cuts. I think into next year. I think cuts won't be on the table until after next year, late next year, and we'll probably see more pauses.
yeah. I think in a perfect world, I think you're right. I think we'll only see a cut if it's in response to a crisis. If something, if shit really hits the fan, they're going to have to cut. But that's.
I think, and to me, what that means, and like a crisis wouldn't be like a recession. I don't think the Fed's interested in cutting until they start to see actual um, disinflation
Yeah,
approaching.
I think
deflation.
I think they want a recession. I think they want unemployment to spike. They've said that multiple times. I mean like a bona fide crisis. Like, like
Kill,
some
kill the
like
bull, Arnie.
I mean I mean maybe this is a good topic for you and I to discuss next week, but
Yeah.
what are some potential catalysts for a big crash? Like commercial real estate is one that comes to mind. So anyway,
Yeah.
um,
Next week we'll do that.
that
And
was that was bloody good
it's
chat, mate. Thanks for that, Wiz.
yeah, no problem.
And everyone, if you enjoy the content, please give us a like, comment, subscribe. We hate money. We'll be available on YouTube and Spotify and anywhere you get your good podcasts.
All right. Take
All
care,
right,
everyone.
hooroo.